Welcome back. Well, it is time to get stock specific. As we do that, just pointing out the SGX Nifty is still nicely in positive territory, still about 0.3% higher. Yeah, we've got some gains going on the SGX Nifty. Though other markets, as we've been pointing out in Asia, they are taking some money off the table. We are looking okay on the SGX. But it is time to talk about stocks. A lot of earnings that came in post hours, market hours yesterday, and our entire research team is standing by with the CNBC-TV18 list of top stocks to watch out for this morning. Good morning, everybody, and happy Friday, first of all. Mangalam, let's start with you, the big one, Tata Consumer.
Well, I haven't seen more inline numbers than this in my life. In fact, revenues at 3,475 crores. The street was working with a number of what? 3,450 crores. You look at the EBITDA, 454 crores. The street was working with a number of 455 crores. The net profit actually came in at 364 crores, and that's higher than expectations. That's primarily because of an exceptional. You strip off the exceptional, it's again absolutely in line. Not just that, even the segments. India revenues grew 29%. The street was working 26 to 28%. Domestic beverages revenues declined by 9%. Again, the expectation was an 8 to 9% decline. And international revenue grew 4%. What was the expectation? 4 to 5%. So, inline numbers, see some green there.
Okay, all right. Thanks a lot for that. Mangalam, well, the Hinduja Group is looking to hike its stake in IndusInd Bank after the recent revision in RBI's private bank ownership guidelines. Sources have told CNBC-TV18, however, the promoters would need RBI's explicit permission to do so, which is yet to be sought. Ritu joins us to fill us in on this important story that she's tracking. Ritu?
That's right. We understand that the Hindujas are in the process of making an application to the RBI to hike their stake in IndusInd Bank to up to 26%. Currently, the Hindujas own about 16.51% as of December, with voting shares at 15.16%. If the RBI does give them this approval, there's a few ways to go about it. One would be to buy additional shares through the open market, but there it would be subject to the overall foreign shareholding cap of 74%, so limited headroom. The other way would be for the bank to issue shares via a QIP or preference shares, but that route we understand is unlikely, at least at this point of time, because IndusInd Bank is not looking to raise equity capital in the near future. So we'll have to see how the promoters proceed, but the first important step would be to secure the RBI nod.
All right, that's an important story, and we'll get you more on that, Ritu. Thanks very much for that. Berger Paints is the next one we're talking about. Mangalam is here with more on the numbers. Mangalam, hi, morning.
Good morning. So, weak performance coming in from Berger Paints. I mean, the top line grew by about 5.5%. The street was working with a number of about 8% in terms of growth, but that was largely anticipated on account of the weakness that we saw in Asian Paints itself. What surprised the street, however, was the weakness that we saw in their gross margins and EBITDA margins, both year-on-year and quarter-on-quarter. The company said they were sitting on high-cost inventory, but EBITDA was down 11% year-on-year. The net profit was down almost 20%. Gross margins down about 200 basis points year-on-year and also about 120 basis points quarter-on-quarter. Importantly, domestic volume growth of the company grew by 6.6%. That was higher than the industry, so they may have gained some market share. We see some red here, but at the same time, let's see whether there is some recovery given the outlook for the next quarter.
Okay, got that, Mangalam. Thanks for the update there. Let's go across to Surabhi for Aditya Birla Capital. Surabhi?
Hi, thanks for that. So Aditya Birla Capital reported a good set of numbers. Their consolidated revenues was up 6% sequentially at 770 crores and their PAT was up 9% at 531 crores. The lending business and the housing finance business, which forms a large part of their revenues, continue to deliver growth. In their NBFC business, the lending book was up 12% and the net interest margin came in at 7% versus 6.5% in the previous quarter. Their PBT in the business was up 11% at 540 crores. In the housing finance business, the lending book was up 3% at 1.28 lakh crores and their net interest margin came in at 5.35%. The life insurance business also continued to show good APE and VNB growth. Their individual APE was up 12% and their VNB margins came in at 20%. All in all, a good set of numbers by AB Capital.
Good numbers from AB Capital, but Reema's back with us to tell us about Apollo Tyres as well as Crompton Consumer. Reema, how are those numbers?
Thanks so much for that. So let me start with Apollo Tyres, where it's a decent set of earnings. Top line growth, 12.5%, margin expansion, 120 basis points, and profits up 30%. Citi says Q3 was much ahead of their expectations, driven by a strong margin expansion. The India business beat was driven entirely due to higher margins, but in the European region business, both revenues and margins were ahead. Crompton Greaves Consumers, however, has reported a miss compared to expectations on all parameters. So revenue growth was just up 7%, margins have fallen very sharply. Margins are down 430 basis points, 10% versus 14.3%, but the expectations were that margins would be at 11.8%. So the margin contraction is very steep, and that's driving a 41% decline in their profitability. So good for Apollo Tyres, it's a miss for Crompton Greaves Consumer.
Okay, all right. Well, let's bring in Rima. Thanks very much for that. Sonal is now joining in on MGL and Sheela Foam, which reported as well. Sonal, hi, morning.
Good morning, Prashant. Let me start with Mahanagar Gas. It was a margin beat, and it was led by the steep price hikes that the company had taken, and that's why going with green on this one. On a quarter-on-quarter basis, revenues are up 7%, EBITDA up 1%. Margins came in at 15.3% versus 16.2%, but it was versus an expectation of 14.2%. Profits also up 5% at 172 crore rupees versus an expectation of 137 crore rupees. Total volumes absolutely in line with estimates at 3.4 MMSCMD, and EBITDA per unit is slightly higher than expectations, and that is something that works for the company. Additionally, stock valuations are reasonable, cheapest in the city gas distribution space at 11.5 times one-year forward earnings. Moving on to Sheela Foam, the reported numbers were weak. Revenue declined 7.5%, EBITDA was down 22%, leading to a margin compression of around 150 basis points. Profits also declined by 10%. But the commentary was positive, where the company said that market share gains have been experienced by them, and expansion in gross margins was to the tune of 400 basis points. It was just that other costs were higher, which led to lower margins. So the stock could open up in the red, but could see some green on the basis of the commentary.
Okay, got that. Sonal, thanks very much. Back to Rima. Rima, you're looking at a couple of tech earnings as well?
Two of them, Surbi. One is Birla Soft, the other one is eClerx. Now, Birla Soft already had fallen 8.5% yesterday after one of its key customers, Invacare, filed for bankruptcy. So the street was worried about the revenue impact, the receivables, etc. Now, Q3 numbers came post-market hours yesterday. Flat top-line growth. Constant currency revenues are flat. Margins are just down to 0.6%, and there is a loss this time of 16 crore. The key reason is the company has now created a provision of 151 crore against the receivables that they're expecting from Invacare. So that's the reason for the loss this time, and the margins dropping off to less than 1%. eClerx, on the other hand, a steady set of earnings. So revenue growth 3.2% quarter on quarter. Margins are pretty flat, just down marginally. A couple of the analysts I spoke to indicated that eClerx margins have positively surprised them, and profits are up 4.2%. So eClerx is steady. Birla Soft already fell yesterday. So how much of the weak earnings is in the price remains to be seen. Back to you.
Okay, all right. Thanks a lot for that, Rima. Well, let's hop across to Manisha Gupta. She joins us to wrap up all the commodity market action overnight. Morning, Manisha.
Morning, Nigel. Thank you for that. Well, I'm looking at the dollar index, which has seen a very smart rebound from a 9-month low of 100.8 yesterday to 101.8 right now. And that clearly seems to be weighing on many of these commodities. So the gold prices, after hitting a 9-month high of $1,970 per ounce, are trading at $1,920 per ounce right now. So a 2% tough cut in gold and silver, both of these commodities, is how we traded, with a sharp sell-off in crude oil prices also continues, where we are now looking at 4.5% of a cut coming in for this week itself. In the metals as a sector as well, steel has seen some decline, so has aluminum, but the copper prices are trading firm, and this is because of supply disruption at La Bamba copper mine in Peru, which accounts for 2% of metal worldwide. So barring the supply concerns from copper, almost everything else seems to be reeling under the strength of US dollar.
All right, Manisha, thanks very much for that. So that's commodities, hard metals in focus. We take a break here. Up next, Keki Misri, Vice Chairman and CEO at HDFC Limited, joins in to discuss their third quarter earnings. We'll also connect with Gopal Mahadevan, Chief Financial Officer and whole-time Director at Ashok Leyland, to discuss their third quarter earnings. So stay tuned, lots coming up.